Monday, January 23rd, 2023, Maneco 64, home of alternative economics and contrarian views. Today we're going to look at why the UK economy has collapsed. And yes, it has collapsed. Even the FT is talking about it, and we're going to look into that. I've been warning since 2021. I even have a playlist for the UK economic collapse. And in these current times, I think it's more important than ever. If you have some fiat currency or normal savings in the bank, people should think about buying gold and silver. This is not advice. This is what I've been doing since 2002 when I learned about the fragile nature of our monetary system, which we're going to look into. So I've partnered in the last few years with gold investments in the City of London. They've been around for over 40 years. Details of how to get in touch with them are below in the description. In North America, I've partnered with ITM Trading. They will help you as well with a free consultation. How to prepare for what's coming, how to protect or even sometimes increase your wealth through precious metals. And I've also got a partnership with Miles Franklin. All the details for all these partners are below in the description. So back to the UK economic collapse. And we're going to start actually with an article that I wrote back in September of 2008, September 27th to be exact. And at that time, I kept a blog called forsoundmoney.com, and I couldn't really focus on it too much. Eventually, I stopped blogging on it because I was still working in the City of London as a futures and options broker. But I think this will show you what's really going on today, not just in the US, but specifically in the UK. And you'll see why. So, the article says this is what the Paulson bailout plan means. So the Paulson bailout plan, of course, was TARP. And TARP was actually signed into law a week later on the 3rd of October, which happens to be my birthday, was signed into law by President George W. Bush. So TARP is the Troubled Asset Relief Program. It's a euphemism, of course, for the Wall Street bailout. So let's continue with the article. This is what I said. And you can replace or add Britons to Americans here. Americans have reached a point in history where they will be deciding whether they would like to give away their freedoms to the bankers or remain a free people. This proposed bailout plan for Wall Street is, in our opinion, the single most important issue since the colonists decided to sign the Declaration of Independence in 1776. So yeah, this is how strongly I felt about that bailout. Americans and their representatives in Congress will literally decide whether 232 years of freedom of the American individual will be abolished in the course of 1 week. If the 110th Congress of these United States votes in favor of the Paulson Plan, the concept of individual liberty and freedom will be buried for generations to come. What hope does the rest of the world have if America gives up on liberty? And I reference this guy here. We should not forget what Sir Josiah Stamp, director of the Bank of England in the 1920s, said about the system of central banking, from which he personally benefited. So here's what he said. Banking was conceived in iniquity and was born in sin. The bankers own the earth, take it away from them, but leave them the power to create deposits. Well, power to create deposits out of thin air. That's what he means. And with the flick of a pen or the stroke of a keystroke on the computer, right? They will create enough deposits to buy it back again. However, take it away from them and all the great fortunes like mine will disappear, and they ought to disappear, for this would be a happier and better world to live in. But if you wish to remain the slaves of the bankers and pay the cost of your own slavery, let them continue to create deposits. We should also not forget that what Thomas Jefferson said about banking institutions. I sincerely believe that banking establishments are more dangerous than standing armies, and that the principle of spending money to be paid by posterity under the name of funding is but swindling futurity on a large scale. Let us hope that the 110th Congress votes for liberty. Of course, they didn't. I think the first vote failed, and I think the Dow dropped 777 points. And then Hank Paulson, the then Secretary of the Treasury, begged Nancy Pelosi to pass the bill, probably paid her and her cohorts a lot of money. And it went through on October 3rd. And in the UK, we had the same kind of situation. We had what's called the 2008 United Kingdom Bank Rescue Package that was signed into law by the great Gordon Brown. Great Gordon Brown, the man who sold half this country's gold at the bottom back in 99 to 2002 and pre-announced it to the market too. So we did the same thing in the UK. And just want to read you here a part that says international reactions. So, about the UK bailout, Paul Krugman, with writing in his column for the New York Times, stated that Mr. Brown and Alistair Darling, the Chancellor of the Exchequer, don't forget Gordon Brown was Prime Minister by then, have defined the character of the worldwide rescue effort, with our wealthy nations playing catch-up. He also stated that luckily for the world, Gordon Brown and his officials are making sense, and they may have shown us the way through the crisis, or this crisis, sorry. Other commentators noted that although the capitalist model should have allowed inefficient business to go bust, the banks were too big to fail, so that was their excuse. Yes, it would have brought down the real estate market. A lot of people would have lost their homes. The city of London and none of the banks that exist now or on Wall Street would have been around. But I think we would, arguably, in my opinion, economies now would be in much better shape. And that's where we come to this article here that I saw yesterday. Is life in the UK really as bad as the numbers suggest? Yes, it is. And again, it says the past 15 years have been a disappointment on a scale we could hardly have imagined. And that's from the FT. And this is how bad it is. I'll read a passage from this article here. It says, go back and look for historical precedents for this, and you will not find much. In the National Institute Economic Review, economic historians Nick Crafts and Terence Mills examined the growth in labor productivity over the very long run. They do find worse runs of performance. 1760 to 1800 was not much fun, but none within living memory. Nowhere in 260 years of data do they find a sharper shortfall from the previous trend. The past 15 years have been a disappointment on a scale that previous generations of British economists could hardly have imagined. I'm going to put a link to this article below in the description under archive.ph so you can read it for free. Don't have to be a subscriber. But you will see that he hardly ever mentions, well, he never mentions the 08 crisis. Maybe that has something to do with the 15 years. The fact that we had to indebt the nation to bail out the bankers and also bail out those who recklessly mortgaged themselves to the hilt, of course. in order to, they were greedy and they wanted to have the big houses. We bailed them out as well. Yes, they bailed out the City of London, and I was there for another 4 years. But I'm telling you what I feel, and you saw that even back then. I could tell things were going to get a lot worse because this gave a lot of power to the bankers. It said to them, you can be reckless and foolish, but we'll bail you out because you're too big to fail. So what that's done, it's sucked out all the economic activity, all your efforts in the private sector, non-financial sector, into the banking sector. It sucked out also all the efforts of the private sector into the public sector. It's destroyed our currency here in the UK. Don't forget, the pound fetched over $2 just before the 08 collapse. And after the collapse, we went down to 140. And now we're languishing around 120. We've been down to almost 1. And why is that? Well, because all the deficit spending that has to be done to keep this Ponzi going has an impact on the currency. And unfortunately, we don't have the major reserve currency anymore in the UK. The US has that. That's maybe why the US economy seems to have done better and their markets seem to have done better. But as I spoke about it yesterday on my live stream, the fact that there's so much deficit spending really hides the precarious condition of the US economy, but also the UK economy. So this is what Tim Harford says at the end, the guy who wrote this article. He says, but we are not in a deep recession. Recently, unemployment has been lower than at any time since before the Prime Minister was born, which suggests that a dramatic cyclical uptick is unlikely. The UK economy has the accelerator to the floor, yet is barely able to gain speed. That is hardly likely to improve as the Bank of England applies the brakes. I don't believe the situation is hopeless. The UK has many strengths and many resources and has overcome adversity before. But if we are to solve this chronic economic problem together, first we need to acknowledge just how serious and how stubborn the issue has become. Well, he doesn't realize that we have been in a deep recession, and the reason why GDP looks positive is because we've been putting lipstick on a pig with deficit spending, and and that's why. And what about the part about unemployment? That is the lowest since before the Prime Minister was born. Well, if you look at the disability living allowance and disability working allowance bill, that's from November 1990. It says the bill will extend help to over 300,000 people. And now you look at August 2020, disability living allowance, number of claimants, 1.372 million. Carers allowance, 1.3 million. Job seekers allowance, 337,000. Income support, 281,000. So you add up all these numbers here and you get over 3 million people that are not very productive. And you compare it to the amount of people that should have been helped, 300,000 people, which are probably the people that really need the help. I would say a lot of these people on disability could be working and they're not. That is why the unemployment looks low, because these 3 million plus people are not counted. And they're about 10 times more than the government expected or Parliament expected when they passed this bill into law back in 1990. They expected only 300,000 people to be covered, actually. So before we go look at the markets, you can pause this video if you want. I'm going to put a screenshot here of the comment that I made to that article in the comment section. And it's pretty much what I told you before, but you can have a quick look at it. I'm not going to go through it. So we'll move to the markets now. It's 8:38 a.m. London time. We got spot gold at 1922.50. It's down just over $3. High's been 36. The low has been 1918.70. Spot silver is down about 14 cents, trading around 23.78. High's been 24.17. Low's been 68. So still struggling below and above 24. I think the key level above in silver will be 24.50. And once we break that level, we could see fireworks, in my opinion. To the stock market futures, they're all pretty much unchanged. They're down slightly, so I won't go through them. To the currencies, sterling is unchanged, 124.07. The euro is up actually a third. It's almost up to 109. It has been as high as 109.27. The dollar is up slightly versus the yen at 129.77. Dollar's down slightly as well versus the yuan at 6.77. Yeah, the dollar's up 1% versus the ruble at 68.30. So to the other currencies, Aussie dollar is up almost 0.5%, just below 70, trading at 69.96. The dollar's down 0.25% versus the Canadian dollar, 133.50. And the Kiwi dollar is up about 0.1% at 64.80. Platinum is unchanged, trading around 1,046. WTI crude is unchanged as well at 81.60. Brent crude unchanged, 87.60. High grade copper is up 1% at 429.50. Quickly look at the bond markets. The 10-year yield is at 3.48. That's unchanged. The 10-year JGB yield has dropped a little further. It's trading at 0.38. So they've kind of capped it for now, that 50 basis points cap. I suspect maybe the BOJ will have to do some more QE to keep yields from rising above 0.5. And to finish off, quickly look at the gilt or the UK yield curve. We've got the 2-year, which is an important indicator for mortgage rates. That's down 4 basis points at 3.44. The 10-year is down 2 at 3.35, and the 30-year is unchanged at 3.71. So I wish you all a very good day. Take care. Bye.